Well, we heard two nasty words today, recession and inflation. So the Bank of England has decided that inflation has to be brought down. It's likely to peak at about 13% this year. And so therefore interest rates are going to go up. And that, of course, is going to slow the economy down, put it into recession for at least a full year coming up before the Bank of England says those prices will start to come down and then the economy will start to grow. And it's pretty grave, it's pretty bleak, and it's going to cause a lot of suffering for people in this country.
Grave, bleak, and going to cause a lot of suffering for the people. These are words we've heard too many times about each of the world's largest economies in 2022. First the United States, then Canada, and now the Bank of England, the world's 8th oldest bank and one of the bankers of the government of the United Kingdom, has predicted that skyrocketing consumer prices and interest rate hikes will push Britain into recession later this year. This is coming just a week after the United States Bureau of Economic Analysis announced 2 consecutive negative GDP growth, the standard definition of recession. Though the Federal Reserve and the Joe Biden administration have not officially declared that the U.S. is indeed in recession, experts are certain that it has already begun. The administration claims that there has been no economic downturn because hundreds of thousands of jobs are being created monthly. However, the story is quickly changing. In July, jobless claims in the U.S. rose above 250,000 for the first time since November 2021. According to reports, the number of Americans filing for first-time unemployment benefits was 251,000 for the week ended July 16, 7,000 more than those that filed the previous week and 9,000 more than economists predicted. In the last week of July, weekly jobless claims climbed to 260,000, and economists are expecting more weekly rises as more and more corporations report massive layoffs and reduced openings. The story is the same in Canada, with the Royal Bank of Canada recently predicting that the country will soon slip into a moderate economic decline which would last through 2023. Thanks for joining us on today's video on Savvy Economists. In this video, we will be discussing the latest bit of news from the Bank of England, which has predicted that inflation will jump to 13.3% in October. Please watch, like and share this video and subscribe to the channel for more. Thanks, and enjoy. On Thursday, the Bank of England announced its biggest interest rate hike since 1994 while predicting that the geopolitical tension in Europe would cause more inflation and push the economy of the United Kingdom into a prolonged recession. The bank also predicted that consumer price inflation rates would rise to 13.3% in October, chiefly because of soaring natural gas prices. With such a high CPI and more interest rate hikes, the bank adds that the UK will likely record negative economic growth from the fourth quarter of 2022 through the fourth quarter of 2023. On Thursday, the bank's Monetary Policy Committee also announced a 50 basis point rate hike for its key interest rate. Unlike the U.S. Federal Reserve, the Bank of England has been raising its interest rate since December, but this is the biggest of the 6 consecutive hikes. With the latest increase, the rate has jumped to 1.75%, its highest level since the global financial crash of 2008. Here is a clip from Paul Workman, the chief international correspondent of CTV News, describing the current state of things in the United Kingdom.
Well, it kicked it up about 5 points, which means it's the largest increase in something like 27 years. But it just is a trend that we've been seeing here for quite some time. The Bank of England has been kicking up those rates, trying to curb inflation as much as it possibly can. A year ago, it predicted that inflation would be 4%. And then, of course, you had the war in Ukraine, which has largely meant high energy prices. And that's the real driver of inflation in this country now. As I say, peaking, it's expected to peak at about 13.5%. We haven't seen interest rates, well, I haven't been here that long, of course, but interest rates haven't been that high since like 1980 in the UK.
Yeah.
Late last year / earlier this year, central banks worldwide embarked on a single mission: to reduce inflation without causing grave economic declines, especially considering that most countries are still recovering from the COVID lockdowns. By all indications, they are failing considerably. Higher interest rates increase borrowing costs for borrowers, drastically reducing the money available for spending, which can help bring prices under control. But this comes at a grave cost. It significantly slows economic growth, which could cause a recession and greater economic woes like stagflation if unchecked. Add this to pressures on gas prices caused by Russia cutting natural gas shipments to Europe in retaliation for the sanctions against it and the existing debt in the system, and here we are. The Bank of England estimates that households will need to reserve an additional 3.5% of their incomes to meet higher gas prices until 2023, 5 times the increase that households experienced in the aftermath of the Saudi oil embargo in the 70s. For Britain and the rest of Europe, recession is a growing concern. Experts expect many factories to stop or significantly reduce their operations this winter due to falling gas supplies. One of such market experts is Victoria Scholar, head of investment at Interactive Investor, a UK online investment service. Scholar explained that the Bank of England approved the hefty interest rate hike so it wouldn't fall behind the curve as other central banks were making more aggressive hikes. The US has had 2 0.75 percentage point hikes, and the Bank of Canada has had a full percentage point hike. According to Scholar, there is a greater risk to the UK economy, which is stagflation, a prolonged period of economic downturn, high inflation, and a high unemployment rate. When this combination occurred in the 70s, it took over a decade for policymakers to get it under control. It's very much doom and gloom from the Bank of England, and not least the fact that it's decided to carry out this almost double rate hike, Scholar said. As Paul Workman explained earlier in the video, a series of supply chain crises and increased demand triggered the first wave of inflation in 2021. But it was quickly worsened by Russia's invasion of Ukraine, which caused the prices of food and energy to increase sharply. Though the Bank of England expects the situation to improve before the end of 2023, officials also note that there is no way to predict what will happen with energy prices, especially with the tensions between China and Taiwan, which seems to have been heightened by U.S. Speaker Nancy Pelosi's visit. With the grave consequences of the Russia-Ukraine war, the question is, can the Western world afford another war with China, which, as we speak, is strengthening its bonds with Russia? Let us know what you think in the comment section below. Also, ensure you give this video a thumbs up and subscribe to the channel for more videos like this. Thanks for watching.